Let's see. Let me move that over just a tad, and we're good. Okay. Hey, everybody. Welcome back to the channel today. Bitcoin is definitely looking pretty darn bearish today. So I figured we'd probably talk about some opportunities here. Sorry, I'm standing up for today's stream because I've been trying to get more a little, not sit down all day. And Loki's over here not liking that at all. So he's over here trying to hop up on top of me. But I'm going to give Loki a treat very fast. There you go. There you go. Oh, yeah, go on. There you go. All right. So again, hope you guys all had a very good day today. I haven't been able to stream too much in the afternoon because I've been streaming so much in the morning, and now I don't think I have to stream much in the mornings anymore. So I'm hopefully going to be sticking back to the 6 o'clock time frame here because I have been pooped. So today we're going to be talking about this Credit Suisse thing going on with Europe. Europe banks kind of having a horrible day today and kind of building up fears again that somehow we're going to have another big event in the banking industry, and let's hope that doesn't happen, of course, because we all want to see things move in the right direction for us. On the other hand here, we're going to be talking about Bitcoin. The technicals for this do not look good on the daily chart right now. It looks like we're creeping down because we were unable to close above that 25,211 resistance level back when we had CPI yesterday. And hey, Mr. Tank, happy to see you back. And what do you call it? So on top of that, Ethereum, I'm just going to talk about a bunch of stuff here today. A lot of data, though. A lot of data. So I want you guys to be paying attention to this one because at this point, we've seen that the market itself has been kind of going more sideways. I'm talking about the stock market. And the crypto market's been having an amazing boom. Like, I showed you guys this the other day. You guys can see Bitcoin over the past few days still kind of up at the high levels here. NASDAQ not at the high levels it once was. Dow Jones definitely not at the high levels it was just at. And you see the SPY over here. Again, not at the high levels it was just at over here. Let me make this cross here just a little bit larger for you guys. Let's go over here. Let's make it twice, yeah. And let me push this up to 150. There we go. All right, so yeah. So Bitcoin is really the overbought thing in this whole market right now, which always gets me a little bit more worried because that always makes me a little bit of afraid that if the market continues to go down, Bitcoin is just going to catch up to it and have something more of a 1,000-point negative day, something drastic like that. But for now, let's kind of talk about the overall market here. Starting off with the stock market, I know, but we'll get over to the Bitcoin market here in a second. Overall, the Dow Jones is still going lower. We're still making new lows for the year. It's not necessarily a good chart that you guys want to be trading at this point for buying. And you guys can see that there's going to be some death crosses here, probably going into the end of March or most likely sometime in early April. So we are looking for more downward moves, if you ask me. I know we'll talk about the economy and stuff like that a little bit later, but from a technical standpoint right now, the Dow Jones does look a little bit more bearish than a lot of the other indexes out there. Now, as far as the NASDAQ, a little bit more hope here. You guys remember us talking about the 50-day moving average crossing above the 200 here? There is more hope that we can actually try to do somewhat of a turnaround, even if the Dow Jones is coming back down a tad. All you really want to see is it come up here towards 12,600. If we're bullish enough to come test out that level, there's a good opportunity we're going to break out. And no matter how bad the economy is, you can see this golden cross pushing us up. Do I think we're going to have a breakout? Personally, no, I do not. If we get up here, I will be heavily shorting or heavily buying puts. But for now, I'm patiently watching this because people are feeling that because they can't put their money in banks and a lot of these other areas of the market are not good, they're tossing their money into stuff like Apple. And if you guys know anything about Apple, we talked about it a while. Apple has such a large market cap that, look at this, it's at levels of resistance right now, or that general resistance level zone over here with a golden cross coming over probably sometime early next week, if not Friday. So, let's go to the weekly chart here. Relative to a whole bunch of other plays in the market, Apple's holding it fairly well. If you put Apple's chart and you compare that to something more like an Nvidia's chart weekly, you can see how drastic everything really changed with a lot of these different plays. Microsoft still relatively down quite a bit. Meta still relatively down quite a bit. I'm trying to think of another tech company here. I mean, you can even go to Tesla. Still relatively down quite a bit, and you can see Tesla even went way above my expectations, really high above because of all this data coming out over the past few weeks. But you guys can see that Apple is very strong. I think, personally, because I do see Apple falling off of a cliff eventually, I can see these death crosses kind of approaching. I can see the fact that the economy, in my opinion, is getting worse. I think we start to feel a little bit more worse for the overall market here when Apple just starts to break down below about 140, 145, $144 is about the right number right now. So I'm watching it closely, but at this point, people seem to be wanting to buy Apple. And AMD here, and AMD over here, which actually broke out above today. Wow. Yeah, it did break out. despite all the chaos here, because people want to put their money to work, but they're just having some issues as where they want to go. You can even see AMD about to have a golden cross here, may even pump up all the way to $95 or so. That next spike is up here 91, up here on 97, probably $97 if we continue on this trend here, which is, again, it's not going to end well if you try to hold it for like a medium term, but for a short term, 2 to 3, like 2 weeks or so, you might be able to make some money off of here, but I'm not going to take that chance. Now, again, as far as Bitcoin, you guys could already see we're facing some resistance right now. It's not looking all too good. If the market can somewhat stay a little bit more sideways today, maybe Bitcoin can hold up. But what I'm looking at isn't so much of the daily chart where we bounced off the 200. It's really over here at the 4-hour chart. And where is my 50? There it is, popped up at the last second. You see how we're testing that right now? Historically, when we move above that 20 or 50, we end up having some really nice moves, whether, bullish going above, bearish going below. If we start breaking down below this on the next like 2 hours and 55 minutes or so, maybe even the next, add another 4 hours onto that, 6 hours and 55 minutes, I think it's pretty reliable that we would probably come back down here to at least test out the 200, probably just around the $3,000 level, $23,000 level. That would end up bringing us back down about $1,000 overall on Bitcoin, maybe $1,200, $1,300. Go over here to the 15-minute charts, and you guys could already see we've already started to break down the 30, getting closer and closer to breaking down. The death crosses are pretty much here. We need to have some type of larger catalyst to keep Bitcoin moving up, because remember, we broke out here during PCI data a few days ago in the morning. We didn't manage to close up here. Now, I didn't talk about this too much at the time because I was so like, whoa, look at all this breakout. I described the market right now as that person from, what was the movie? World War Z, where the Israeli women, like in the military force, whatever, like the badass bald woman, she got bit by a zombie. And so what Brad Pitt did was slice off the arm. So right now we're kind of in shock. We don't have a hand, but we're not going to turn into a zombie. So there's like some good news here, some bad news, but the majority of the news still seems to me to be bad at this point. So putting that in perspective about Bitcoin, we just need to close above the 25,211 level. If you guys want to see more promising moves up to 26,700 again, 28,000, 29,000 for Bitcoin, we're going to have to close above that because that is something that's going to be crucial. You guys could even see as we were trying to close above it here before the day closed. Let me see if I can just put a little bit of a line right here. Let's see, where was this at? Market closes right around here. There we go. They were trying to push this down towards the end of the day, market day, excuse me. And you could see it worked out. There was not really much support here that held. As soon as we broke down below the 20 on the 15-minute chart, which should be, I guess, that's the way it is. But my gosh, guys, we didn't really look too strong, and now we're still seeing that level of resistance up here once more. They're trying to reestablish it. One other thing here. This is what I mostly focused on. This is what I was trying to tell you guys at the beginning of this conversation. I told you guys if we do, I didn't think we were going to, no matter how high we popped up, I didn't think we were going to hold above the 200 weekly moving average here by the end of the week. We've gotten pushed back down. Hopefully I'm wrong and something else can happen. I think primarily what whales are trying to do here is change up the technicals just a little bit. You guys can see here on the weekly chart, there's an opportunity sometime in April for some type of golden cross movement between the 20 and the 50-week moving averages on Bitcoin. Historically, let me go over here to this one. Oh, I need to get another chart for you guys because that one's followed the GAN fans. Oh, actually, no. Let's go here. Let's go there. There we go. Okay. Historically, these moving averages are quite important, right? The death cross right here between the 20 and the 50. We can just get rid of the 200 here anywhere. Boom. Big nasty move. Golden cross right there. Beautiful move. Death cross right here. Beautiful move on the downward side. Golden cross right here. Moved up a little bit higher. Not as much. I think, oh, which side? Golden cross right here. Moved up a little bit higher. Not as much. I think, what happened? Oh, 2018, the market kind of had a little bit of a flurry as we were trying to grow rates. So the dollar got stronger. Of course, Bitcoin went down. But over here anyway, came down. And you can see the majority of the time, again, golden cross right here, death cross right here. The majority of the time, these weekly charts or these weekly crossovers are very important for some of us swing traders here who like to just buy during the bull market. There are a lot of people who don't even care about all this stuff over here or all this stuff over here. They just wait for this. They don't care about finding the lows. They wait for the crossovers. They wait for us to break above certain moving averages, and then they start buying in. Usually people try to buy in above the 20 here, and so you might not get, potential, you might not get 1,600% profit, but, if you do here from here, you wait for the breakout, you're looking at 741% profit. If you wait for the crossover here, that crossover happened pretty much right here, you're looking at 487% profit. You're still making money. It's easier to catch the these middle ranges rather than trying to catch the bottom, but that's what we dollar cost average. So no matter what happens, you're still the dollar cost averaging here is probably going to be somewhere around here, still below this and still below the crossover over here. That's what dollar cost averaging is usually better, but I don't want to dwell on it too much. Just to say that historically speaking, a golden cross here is usually a very good bullish sign for Bitcoin. Usually, so we've never had this type of crazy economy. And you guys can see that, maybe we might be looking at something like that, but we still kind of pop up a little bit more than eventually come down. Maybe that takes us to 30,000 if we're lucky, especially if Jerome Powell gives up on fighting inflation in order to save the banking sector. Let's go back over here. Now, one other thing I wanted to discuss with you guys today is probably get out of this one, hop back over here. Ethereum also failed to close above that $1,700 level. We couldn't do it. Again, everything is kind of falling to the same place here, but at least we're going to have the opportunity, I would say, to break above this 50-day moving average over the next few days, and really this 50-week moving average over the next few days, and maybe we can try to close above that. We're looking at a potential golden cross here between the 20 and the 200. Not as important, if you ask me. You could even do the death cross here, didn't do anything. But going over here to the daily chart, again, you guys can clearly see we just weren't able to close above it. And to me, that shows a big signal of weakness because we had all this, what the market perceived to be good news. You guys know I hated all the CPI data. That was horrible CPI data. But that's from like an average Joe perspective, not a hedge fund manager perspective, which I should be talking more like. But yeah, so you're starting to see that weakness here as well. I mean, I'd say sometime over the next few days, I expect a larger drop. Hopefully it's not today. You see Ethereum right here breaking down below both these moving averages usually is a pretty sizable move. With Ethereum in this case, it fell down as much as 6%. Hopefully we don't have that. I would say Ethereum probably goes down at least 2% today, if not maybe up to 4 or 5% if the market continues to feel these kind of waves coming over from Europe, because now that America kind of got its banking act together by doing some more quantitative easing, doing the bailouts for the banks, now that we've done all that stuff, now Europe is facing its crisis, and this is where we kind of go off to one of the news stories for the day, which is Credit Suisse. Everything that you guys have probably heard on the news this week is relative to what is Jerome Powell going to do because of all these things happening with the Silicon Valley Bank, and Signature Bank going on, and I think there was another bank that didn't get closed, Regional Bank or something like that. But let me see if I can just find the story for us right now. There we go. There you go. Swiss National Bank says it will provide Credit Suisse with liquidity if necessary. And there you go, breaking Credit Suisse to borrow up to what, $54 billion from Swiss National Bank. $54 billion. That's no small number. And this bank hasn't been healthy for a while, guys. So again, understand that. But basically, they go on to say the Swiss National Bank said Wednesday that Credit Suisse is currently well capitalized and that the central bank will provide additional liquidity if necessary, as regulators on both sides of the Atlantic try to calm fears of a spreading crisis. And I think, trying to make this an articulate way that you guys will understand, if you guys remember, there's a movie out there called Too Big to Fail, and it really talks about what the government was doing during the 2000 financial crisis. So it's a movie that looks like this, right? This guy's in it. And at one point, they let Lehman fail. I mean, if you guys remember, Lehman Brothers fell. It was a huge thing. Well, we were calm for a few days after they let it fall, but then what they realized was that everybody was panicking. There wasn't enough credit lines in place. And if there's not enough credit lines in place, people can't get the money they need to for people withdrawing money and stuff like that. I think we're in a healthier banking environment than we were in 2008. But you are starting to see those waves start to approach other sectors of the economy, other banking sectors, right? I think it was the French economic minister or something like that who had a call with that character in the film, and she says, "You have let your poison spread to our shores," or something like that, right? All types of drama, of course, because it's a movie, but the contagion just spread, and right now I don't think I'm necessarily convinced that the government is telling me the truth when it comes to everything is perfectly fine, we're going to be fine. I'm not panicking, but I am just being cautious, and I'm keeping an eye on what's going on, okay? And we'll see how that goes. Don't have more than $250,000 in any account, guys. Don't fall for it. If you guys need multiple bank accounts, do it. At least you guys will be insured, and you won't have to do any problems, or you won't have any problems with that one. Now, I do want you guys to watch this very fast. This is just a very, very short video here. Plop that up. Is it going to have an ad? That's the question. Is it going to have an ad?
All right, as Credit Suisse joins Silicon Valley and Signature on the list of troubled banks, the question is whether more will join them. Joining us now to talk about the banking crisis and the ripple effect in the market, senior markets commentator Mike Santoli and CNBC.com banking reporter Hugh Son with us in the studio. Hugh, let me begin with you. At root, fundamentally, what's the matter with Credit Suisse?
Okay, so Tyler, glad you asked.
Yes, it's me.
Yeah.
Tyler, yeah.
Investors have woken to the fear, to the increased risks they're building up the banking system as a result of moving from the regime where we had zero interest rate policy for about a decade into a more normalized environment. So you have basically the market sniffing out. You've had 3 banks fail here in the U.S. in the last week. Now you have the market essentially sniffing out
Every bank.
Who could be next in the system. So there are some similarities. And if you look at Silicon Valley Bank, we know that on Thursday, $42 billion in deposits fled the bank in a single day. That's pretty dramatic. Now, we've also learned that with Credit Suisse, in the fourth quarter alone, they lost 110 billion Swiss francs in their deposits. So 37% of their entire deposit base evaporated in the fourth quarter. That was in the fourth quarter. Here we are in March. Some of those outflows have continued.
But this has been a notably slow-rolling debacle in the case of Credit Suisse. It's not like SVB, where one day everything seemed okay and the next it didn't. Here we've been watching Credit Suisse deteriorate.
Credit Suisse has been a known problem player. I would say that the tinder has been laid out, and now with the crash of these 3 banks in the U.S., certainly the fear of contagion has spread, and it really is the market essentially saying who's going to be next. And in Europe, they're the weakest of sort of a bad bunch, right? They've had risk management issues over the years. Their revenue has collapsed. Their costs are relatively sticky, so they're in a negative feedback loop at the moment. And, I've talked to sources, and one of the common things they'll say is, when the name of the country is in the name of your bank, you're probably going to get bailed out at some point. Sure. But that has not happened yet. And so there's concern.
All right, and then there we go to the news for today. Credit Suisse to borrow up to $54 billion from Swiss National Bank. If you guys didn't know, the Swiss pride themselves on their bank, so they want to make sure that everything is okay. But I mean, borrowing up to 50 billion Swiss francs, 53.68 billion, from the Swiss National Bank under a covered loan facility and a short-term liquidity facility. This is breaking news. Please check back for updates. That should help out the market, you would think here. But I think it just means that all of a sudden, all of these governments are realizing how bad the situation is. And that, to me, makes me worried. If they're really concerned about all this, I should probably be concerned about this too. And and that's where it comes down to the fact that I'm just not too optimistic over the next few months. Bitcoin right now is still looking a little bit weaker. As I told you guys before, we're looking like we want to break down here. But hopefully we can have some type of tidbit stop, maybe around the 200 here. I don't want to come back. Oh, this is Ethereum, excuse me. I don't want to break down below the 20 moving average here and start heading back down to the 200. We're on a cliff's edge as far as I'm concerned. Small cliff, maybe more of a hill's edge. But, I am pretty concerned about it. I might even turn the 20 here for now just over to the 4 hour and then go over here to the 5 minute and see if it lets you stick. Yeah, you guys can see how close we are to that support limit right there. We don't want to start breaking down. That would take the whole market down with it. And I want to remind you guys, a majority of coins out there were not pumping up with Bitcoin this week. So altcoins are still looking overall pretty bearish. You had a few like Ethereum really following along, maybe some Dogecoin, maybe some FTM. Most coins were not having these beautiful pumps like Bitcoin was. So if Bitcoin continues to come down, you might see altcoins come back down in one of 2 ways. One, they don't come down as much because they didn't really follow Bitcoin in the first place, or they go down even more, building up the overall dominance of Bitcoin, which is what I would say a lot of investors want to see. But if we go over here to CoinMarketCap, actually, we can just go check out dominance. Sorry, Loki's over here whining because I have my desk stood up today because I'm standing up to talk with you guys, and he can't climb on my shoulder and be like an annoyance. So there you go. He will get a treat. You guys won't see it, but maybe you guys can. Loki, up. You guys can kind of see him. There you go. Good boy. Good boy. All right, so go over here to dominance very fast. Which one is this? Bitcoin dominance chart. Maybe I should slack it on right here. Really since the beginning of this last year. All right. Will that work out? I mean, I don't really think we need to see all this for now. You guys can see that Bitcoin dominance has been growing. Back in end of last year, it was on 37.96, so about 38%. Now up to 43.5. Bitcoin dominance is grinding a little bit more, so that's kind of nice news. The last time we had dominance this high was all the way over here Monday, 6/6. What was that? Oh gosh, was that May, June 6th of 2022? What was happening around June 6th of 2022? June 6th. That's right before we had a little bit of a catastrophe, isn't it? Let's hope that doesn't happen again. This was just a short. This was a short consolidation phase here. June 6th, 2022. Yeah, okay, that's over there. So, what was the dollar doing then as well? February, March, April. June, the dollar was having a reversal. That's what spread the fear there. And what do you know right now? Bitcoin's in the process of a reversal. Huh. This banking situation really killed us, though. I mean, as far as like us coming back down potentially and kind of saving Bitcoin a little bit, this problem with Europe, maybe I can just go over here to the 50-minute chart on the dollar index. You can see this rapid rise that occurred. It's pretty darn wild. Huh. So yeah. Again, the technicals aren't good. I'm not going to say they are, but I am just trying to inform you guys about what's going on, the possibility for us to go up, perhaps, down, perhaps, and what's kind of going on from a historical standpoint. To me, let me put this back as chart. I'd probably be looking at shorts at this point. Probably not even trying to trade during normal market hours. It's been freaking chaotic. Bitcoin, yeah, the 4-hour. Yeah, it's really, can we hold this right now? If we can hold this, awesome. If not, we come back down to probably $23,000. People panic a little bit more. We'll see. It's been fun to watch CNBC try to question and make fun of Bitcoin for going up, even though everything else has been going down. They are salty that Bitcoin's been going up while all their precious stocks are going down or sideways at best. So that's been pretty fun. And hey, Mr. Tanker, Northeast Philadelphia in the house. Happy to see you guys back. And hey, the Razorback. Happy to see you guys as well. Good evening, Mike, and everyone. Good morning, or good evening, Bideford, excuse me. And hey, the Real Transporter. Nice talking with you on Twitter. I see Bitcoin going to 60K later this year. That would be a great level to short at. What do you call? I mean, I don't see that happening right now because I think we're going to be going into a recession. But if it does get to $60,000, sure, I'd be very, very happy to try to short that sucker down. Maybe if we get some banks from outside the country to start pumping up Bitcoin, that'd be a nice move for us. Add 10-hour time frame looks like a flag on Bitcoin. Kind of a nasty flag. Look at that. Do these breakdowns really work on this one? They don't usually work out too well, but guess we have some over here. I mean, yeah, they don't really give you too many big moves, do they? But I'm thinking from this perspective, you probably just want to hold above $24,000, and that's pretty fair. I'm looking more at the 20 moving average here, but they're still kind of in that same realm right now. I would say pretty close in the same zone. We can put the 5-minute chart on here for now and just kind of watch Bitcoin slowly drag down, but I don't think it's gonna. You'll know pretty fast if we're gonna try to bounce, which we normally bounce before we break down these levels, or if there's a whale here that just wants to tank it. At this point, I don't really see a reason for a whale to even try to tank this. Let's let it grind for a little bit longer. See. And hey, Mr. Quinton, when do I go live? Normally, I try to go live 3 to 4 times a week. I guess sometimes 5 times a week. Around 6 o'clock, kind of around now. But over the past few days, I've been getting no sleep at night because I've been watching all this news and stuff going on. And I've been going live early in the morning to go over the CPI data, all that type of stuff. I'm not going to be going live in the morning for the next few days because I am just beat, like just physically and mentally tired. This morning I tried to go to bed at like 3 o'clock in the morning, but I couldn't because Loki saw some stranger walking outside in the cul-de-sac, and all he was doing was growling and roaring, and waking me up like nosebleed. I'm like, hey, look at this guy. Who's this guy? And so, I just went upstairs, turned on CNBC, and ate some cereal while I made sure that nobody was going to break into my house because I just had my rifle next to me. So I didn't really do anything all night last night. So, but yeah, normally I will try to go live around 6 o'clock most nights for you guys. Usually Monday through Friday. I do a couple of videos for the members on the weekends here, but not really for anybody else there. Let's see. I saw Bitcoin was about to death cross on the 1 hour chart, so I've just been waiting on it. I mean, Bitcoin is definitely pretty bearish right now. It's just that it's usually a day trader's opportunity for me. And I'm looking at this and I'm like, okay, I could try to short this down if I wanted to, but I probably would just try to short it down if we're breaking down below the 20 here on the 4 hour chart. I'd be more than happy. And then, you might have your first scale out level, around 23,744 if you guys are doing a margin play. And then after that, just hold on tight, wait for it to come all the way down to $23,000 and have fun with it. Because if you guys are going after this little boom here, you have a little bit of a hiccup right there. So you hold that support level right around here, 23,776. Come back down here to around 23,000. Remember, 23,000, that's the level. It also matches up with the 200 right now. So this one also matches up with the 22,000, the 51, right? So at this point, it's smaller day trades for me. I'm not even going to change my methodology on it. There's no reason for me to change it. It's been working out fairly well. 25,000, there we go. But all we're waiting for right now is to just try to hold above this. And, we'll see within the next 8 hours or so, maybe probably just actually 6 hours, and we'll be fine. We'll be fine. I mean, we might break down. We probably will break down, but it won't be like, I don't think it's going to be enough of a breakdown and cause people to, flip out and panic and all that type of stuff like before. What do I think about ACH? I don't know about ACH. Let me go over here to Finviz and see if it's this one. Nope, it must be some type of crypto. So let's go over here to CoinMarketCap. Alchemy Pay? Don't know. Low market cap of 175 million, but it is, number 166, so it's on page 2. As far as the chart, 3 month. As far as the chart, I wouldn't be anywhere near this thing. This thing is pumped up too much for me to want to buy in now. I would need it to be grinding back down on dollar cost averaging at the moment. Bringing the fiat and global economies. Well, bridging, excuse me. Crucial payment support for Web3 platforms is here. Enable users to buy and sell crypto from your app. Peerless global coverage. The coin doesn't have good technicals, but it seems like their coin would be a good opportunity to do a long-term hold on it because it looks like they have some progress here. Yeah. ACH. Let's just go to USDC. That's a pretty big fee they have there. 300, you only get $283 worth. That's how I normally check to see how much the fees are here. I'm sure they could probably get those fees down eventually. I would consider buying some of their token, but more of a long-term, that short-term grind, that short-term pop makes me not even want to touch it right now. I want to wait for it to move down a little bit more, or if I want to start buying now, again, I'm just going to do the dollar cost averaging. I feel no incentive to do anything besides shorting for, another 2 months on that token. Oh, and hey, Larry Summers. Huge crude oil drop today. I picked up some UCO at 2x Bullet ETF for the summer recovery right before June. I mean, it seems like a really good move because at this point here, first let's go over the chart as far as oil. Because we had been talking about this for a while, how we were just staying in these zones. And then all of a sudden, what happened? Banking crisis. Everybody's freaking out about the money. People are feeling the economy is going to slow down rapidly due to constraints in the credit markets. I guess we can just do this. Or... no, let's just use the classic one because that's the one we always normally use. U.S. oil, and you can see the 5 minute. It's still getting pushed down here after a little bit of a bump, I guess, towards the early morning when the market bottomed off here. The daily chart, we broke down. I'm interested to see what the Saudis and the oil producers are going to do. Are they going to cut back on production or what? Because this thing still looks like it wants to come down even further. A weekly chart here, right? All we have to do, guys, we got a day and 21 hours left for this week. If we close down below that, holy moly, we're in some trouble as far as oil prices going down. But I do think you're right. There will be a recovery coming in over the next few months, most likely coming in, later April, May, June, maybe May, June. Usually June is when all the mechanics are fully booked up because everybody's doing their tune-ups and whatnot. So I'd probably say, more May, June there. And then, of course, summer, would stay at those levels. But yeah, oil's just kind of going all over the place now. Oop, didn't even spell Saudi right. Saudi Arabia's energy minister slams no OPEC bill and price caps. Let's see. No. The heck? Something is going on with my microphone where I can hear these little staticky plays. There you go. One day ago. OPEC Plus to stick to production cut. Saudi minister tells energy intelligence. Cairo, March 14th. Saudi Arabia's energy minister, Prince Abdulaziz bin Salman, told energy intelligence in an interview on Tuesday that OPEC Plus alliance will stick until the end of the year to production cuts agreed to in October. There are those who continue to think we should just adjust the agreement. I say they need to wait until February, December 29th, 2023, that's the end of this year, to demonstrate to them our commitment to the current agreement. Right? And then I guess there's some type of thing going on with the proposed NOPEC bill. Have any of you guys heard of this? Because I have not heard about what this NOPEC bill does. All of a sudden, I'm hearing about it now. Last week, U.S. senators from both political parties reintroduced the so-called No Oil Producing and Exporting Cartels, or NOPEC bill. If passed, it would change the United States antitrust law to revoke the sovereign immunity that has protected members of the OPEC alliance and their national oil companies from lawsuits over price collusion. Oh, huh. There have been several attempts to pass an OPEC bill over more than 2 decades. I mean, that would be freaking chaos because, again, are the Saudi... Dude, what the heck is... Why am I hearing this faint crackling from my microphone? Sorry, guys. But, like... Maybe a new wire or something because I've been messing up some stuff here. Doesn't matter too much. So... As we go back in here and look at Bitcoin for a little bit, does the Saudi Arabians, does OPEC, do they manipulate the oil markets? Yes, because they want price stability. They want the price of oil to be between 70 and 80 bucks, so there would be enough money being made by the corporations, so they would therefore invest in more jobs and more drills and keep the cycle going. So there's like the industry stays strong and afloat. Does America do the same thing as far as price manipulation? Yes, we do, right? We manipulated the price drastically over the last few months or last few quarters because, as you guys remember, we were dumping our national emergency reserves of petroleum out onto the global market or to the American market to help our prices because, as all of you guys know, Joe Biden was getting hit during the election cycle as far as high gas prices. It was a freaking meme on TikTok, right? And they had to figure out a way to do it, but since they keep on telling the oil companies here that, hey, we only want you to have oil for like another 10, 20 years, remember the State of the Union address, they're not really inclined to say, hey, why would we invest all this money into drilling oil to help you out when you don't even want us to exist in 10 years' time? Like, that'll be a loss on an investment, and that's we have a fiduciary responsibility to protect our shareholders from stuff like that. So again, they're not going to do it. But again, guys, like here, I'm not typing anything right today because I'm so tired. But here's the petroleum reserves. You guys can see we're building it up. 2000 built it up even more, right? Dumped a little bit in 2008. Oh, let's say, what is this? 2012? 2012. And then all of a sudden, coming over here, 2020, April, boom. Actually, I would say it's like more like 2021. We started coming down hard. And, now it stopped, which is why you see energy inflation start to come back. We talked about that before. I cannot type like slanted like this. It is not working out for me. But okay. Remember, energy inflation. Let me go back over here to the 5-year. Right? Is this energy inflation? Maybe I was thinking about oil inflation. No, it was different the other day. But it doesn't matter. Maybe they adjusted it because when you look at the new data, sometimes it can be off by a little bit. It's coming down a little bit more. Which chart was I looking at? It was not this. Because we had hit a pretty low, good amount of dropping down in inflation and started to peak back up. I'm not looking at the right chart, but that's okay. For now at least. But yeah, so you're still seeing that type of inflation rising up. It might not be this energy inflation here, or I'm not looking at the right data. United States energy inflation. No, I think that's it. Yeah, no, this is the right one. Yeah, this is the right one. Oh, I wonder if it was revised. I think it was revised. That's what it was. Okay. Because I can see the dip right here and how we bought back up. Now we came back down a little bit more. That makes more sense. I can see that happening right now. But okay. Basically, There's going to be a big battle going over that for the next few weeks. And let me lower the volume down here. There we go. And hey, Mark Matters, welcome back to the Sapphire Level, man. I really do appreciate it. Let me know if you have any questions, my man. And hey, Moonshatter, good evening, good evening. I learned if I trade 5 minutes, I get burned, so only checking the hour on crypto. That's not a bad idea. Find the strategy that works for you, but just make sure that you have your paper trading account so you can figure all this stuff out before you lose money in it. And then also have your trading journal so you can keep track of every trade you're making. That way you actually know where you're having success in the market. It's really important that you have like an analytical or a data-driven approach to trading. You don't want to convince yourself you're good at trading daily charts when you obviously suck at it, but you know the data will say, hey, Michael, you suck at trading dating charts. You should perhaps just trade the 4-hour chart, or just trade the hourly chart, or just scalp on the 15-minute chart for a few hours at a time. Or, you know, day trading, intraday trading, whatever you want to call it. But for now, at least, we're trying to bounce off. That'd be good. And let's just hope we don't break down below this sometime today. If we do, that's going to be a really nasty move where Bitcoin probably falls in about 500 to 1,000 points. I've been trying to get better with the charts so I don't lose money anymore, and I am a lot more confident before and haven't lost anything on my last 3 trades, sticking to the hour buy alert, sell alerts. Dude, if it's working for you, keep it up. That's the thing. You got to double down on what's been working for you and don't try to trade every single thing, especially because right now, as you guys know, now is a freaking volatile time. Like if you go over here to check out the VIX, we've been climbing up here fairly well. This is a 4-hour chart. We've been climbing and climbing and climbing. We'll see how bad things really want to get. Hopefully we kind of peak here, then come back down so things are a little bit more calm. But, you know, if we start coming back up here to 33, that means a big, nasty event has happened in the overall market. Ooh, excuse me. There you go. How's everything else doing right now? Everything else is pretty much down by just a little bit, kind of following Bitcoin. Bitcoin's at about break even. Yeah, we're not looking too bad here, guys. Let's go over here. Get out of Alchemy Pay, excuse me. Coin market cap. Last 24 hours, we have a few things that are up, but it looks like the majority of the stuff is pretty much down. Immutable X is down 9%. This thing looks like it's been pretty volatile, though, so I can't blame that one. Looks like in the last 24 hours, a lot of stuff on the front page has pretty much just lost around 7-8%. And that makes sense, because remember, not a lot of stuff has been popping off like you would expect. Like when Bitcoin goes up, you expect altcoins to also follow it. We haven't been seeing that all too much here. Let's go to the daily chart. So some coins had those big pumps up like Ethereum and Bitcoin. Let me hop on right here. Right, big pumps. Matic didn't have that huge pump that brought it back all the way up here. Dogecoin, small pump. Okay, cool. XRP. Oh, what happened to all the XRP strength? It was just on the verge of a breakout. Now it's all getting tanked again. You know what? XRP has relationships with banks. But XRP's on the verge of a breakdown again. My gosh, talk about trying to hold for multiple months on this thing. Link didn't come back up enough. STMX didn't come up enough. Litecoin, Sheeb. You know, we're not seeing altcoins come up as much as we need to, but at least they came up a little bit with Bitcoin, right? At least they came up a little bit here, Sand a little bit. So all these altcoins had really monster moves, and they've given back a lot of those moves, but the Bitcoin isn't forcing them to go back up to the highs they had a few months ago. That would have been awesome. That would have been really good for the entire market, but, you know. There we go. All right. Do I see Credit Suisse hitting $5 tomorrow since they're getting bailed out? Probably not. Credit Suisse isn't a healthy bank in the first place. So people haven't been trusting them for some time, so people have just been moving money out of the bank. A healthy bank is a bank that makes their clients money, the bank itself is making money, and people are consistently bringing their money to the bank. So their overall account balances are going up. More and more accounts are being made and opened up so people can put their money in there to get their money working for them. It's like the total opposite. You're seeing Credit Suisse lose money, and you're seeing people pull their money out of the bank. And so what's happening there is that means they're just losing more and more money. It's been grinding down over and over and over again. Go watch. I just put a CNBC video on a few minutes ago. Watch that at the beginning of this stream, or you can just watch it on YouTube, I would assume. But maybe up to 250 or something, maybe something like that. You'll have a clear idea of what's going to be going on, though, basically, what's been looking on the European banks. I don't know when the European bank opens up, or European goes. So, broader Europe, 3 a.m. to 11:40 a.m., and that's on the East Coast. So the Pacific Coast, I don't know if it has Pacific Coast for us. Oh, that's just all the same thing. So that means around midnight. Another, what was that? 3. You got like 5.5 hours until this market opens up, and you'll probably have something good to watch then. All 2:30. Russia opens up a little bit earlier, but who's actually paying attention to the Russian markets? Yuck. The ironic thing is, if the West's banking systems are having this much trouble and Russia's is not, dude, what are we doing wrong here? Like, the Russia strategy, according to everybody I see on the news every now and again, whether it's Fox, CNN, MSNBC, BBC, Al Jazeera, whatever other news sources are out there, I don't know. They've all been saying that Russia's playing the long game here, and they're just waiting for us to our will to break, or they're waiting for us to the people of the countries be irritated enough of all the money we're spending on the war instead of like spending the money on the homeless, the vets, the stuff like the border, the traditional stuff that people get ticked off about. And at this point, I'm like, if Russia, like if our economy goes down, like in Russia's economy is just like not doing great, but just doing so, I'll be so ticked off as an American, be like, how the heck did we let this happen? Because we've sanctioned Russia's economy to like the hilt, and we're still messed up. You know what? They backed their Russian whatever their currency over to the gold again. Maybe we need to go back to the gold standard here because this is getting pretty ridiculous here about all the bailouts and stuff. Hey, Mike, I have a question about the red Fed rate hike. Everyone says it's different. So can they pause? That's bad, but it's raise 25. That'd be good. Everything is bad. There are lesser of two evils when it comes to rate hikes. Okay, so I would say kind of in January, February, before we had this banking crisis kind of play out, it looked like Jerome Powell wanted to do a 50 basis point rate hike because inflation is still sticky. It is still very, very sticky. That's why when we went over to PPI numbers and the CPI numbers a few days ago, I was showing you guys the individual charts of inflation and how they were causing us some issues here. And I think the easiest one to kind of show you guys how bad a big proponent of inflation is when we go to rent inflation. Now, this rent inflation here from the same website, if you guys ever want to just like lose time and look at analytical data about the economy, go to Trading Economics. It is a fantastic website. And I have an ad blocker on, so I don't see any ads. I don't know if they even have ads, but it's nice data. Look at rent inflation here. Maybe you guys can't see how much it's gone up. Let me show you then zoomed in a little bit more. It's not even slowing down. All right. And houses aren't really being built up in a very timely manner. And then when they are built, it's not like the houses or the apartments are cheaper than any other apartment on the block. So if they're saying, hey, we're building up all these apartments, but at the same time, they build up a new apartment and the apartment is the exact same cost or more expensive than the other apartments, how are the prices going to go down? I think that's what like people are not grasping here as far as the Fed and things of that nature, or those upper people that kind of look at more macro level types of things. But inflation is not in a good spot. I know we're happy it went down to 6%, but 6% inflation is still incredibly high, right? It's still incredibly high, and inflation got worse from month to month. It's just not what you're seeing. At least with the PPI data coming out today, that was a little bit better. That was really, really good. But to me, that shows that our economy is actually slowing and we're starting to see a little bit of a panic here. Now, because we did have that banking crisis, and we are in the midst of a banking crisis, I should say that right now, you're not going to see him do 50 basis points. If his primary goal is to fight inflation, he will raise interest rates by 25 basis, and he'll probably just stop after that, or at least do one more. Maybe just stop after that one. We're not entirely sure, okay? Now, he doesn't want to stop because you guys know what's going to happen if he stops. The stock market's going to go start ripping like crazy. Everybody's going to be so jubilant, and guess what? Everybody's going to start spending even more again. What happens when everybody starts spending more again? Inflation goes up. What happens if inflation goes up? He has to figure out a way to get inflation to come down so we don't spiral and go into hyperinflation, and that means he'll have to keep on raising rates, okay? So that's like the one side of the equation here. If he pauses, that signals that something is very, very bad with their overall banking system, much more than what the news media and everybody's been talking about over the past few days, okay? Signals something very, very bad is happening, and it shows that inflation is not his primary goal. If inflation is not his primary goal, that makes me more concerned that inflation is going to stay higher, or like it may even reverse, or it may stay flatter for longer, which is going to mean more pain for the everyday American out there. It's something that's going to be a hard choice for him to do. If it was me, which I am nowhere near as knowledgeable about the economy and all the data they look at, I would just do the 25% basis rate hike, because you've already backstopped the entire banking system. Remember, the FDIC is insuring everybody's money now. They have access to all this credit. They have access to all this money if they want to trade their bonds off and get money for liquidity for the banks. They're kind of all safe, in my opinion, or at least that's what I've been told by the government. So I'm kind of feeling like going with the government's methodology here, excuse me. So if we're being told that banks are all safe now, they have access to credit, they can sell their bonds in a swap rate, which isn't going to hurt them too much. They, if they do go under, people will be insured. All of their money will be insured no matter, like way above the $250,000 requirement that is normally there. So there's like a stopped bailout right there. And on top of that, because they're adding more liquidity into the market, that's called quantitative easing. That's an inflationary move in and of itself. So if he's not even combating that inflation, we're in trouble if he thinks that raising inflation is more important than rising inflation is not as important as the banks. All right, so I would say if he does a 25 basis point rate hike, I would be happy. I would understand it. I'd be like, okay, that's fine. It's going to cause some pain, but we have all this backstop now. If he says we're not going to do any rate hikes, the market will boom. But to me, that signals that inflation is going to get much worse over the next coming year, and that eventually we're just postponing a very long and negative, nasty move that's going to really cause a lot of pain to a lot of Americans out there, because inflation is just going to get worse. So, and this is the guy that says the Fed is there to help out the everyday people because of what we all saw with 2008, how the Fed, everybody bailed out the bankers. They gave themselves huge bonuses. Remember that? They're trying not to follow that move last time. So you might actually see him become a Volcker, I forget what we call it. Volcker? I don't know how to spell the guy's name. There you go. This is Forbes. This is from last year. This is from November of 2022, so it's a while ago. Okay, for you guys. Once. Done. Yeah, show me those ads. All right. Haunted by the ghost of Paul Volcker could tank the economy, experts fear. Okay. Economists increasingly fear the Fed is now pushing the U.S. and the world into a deeper than needed recession, risking millions of jobs and market stability. During Volcker's reign, unemployment stayed above 10% for 9 straight months, and mortgage rates hit nearly 17%. 10% unemployment? Horrible. Mortgage rates at 17%? Who's buying a house? Who can even afford a house at that point? Nobody. Some months after Jerome Powell became Federal Reserve Chair in early 2018, the former Attorney General, a former attorney and longtime investment banker, began carrying around a new memoir by Paul Volcker, keeping at it, The Quest for Sound Money and Good Governance. I actually thought I should buy 500 copies of his book and just hand him out. The Fed, Powell quipped at a press conference in October 2019, just 2 months before Volcker passed away at 92. I didn't do that, but it's a book I strongly recommend, and we can all hope to live up to some part of who he is. Now, let's see. Trying to find out if we can just learn about Paul Volcker. No. Okay, we don't have to worry about that. I'm not going to go through all that whole gibber jabber. Basically, what Paul Volcker did was he stopped raising rates too early, and in fact, he started to cut them. But what happened during that point is inflation started to skyrocket again. And because inflation started to skyrocket again, he had to stop helping out the economy, stop helping out the banks, and he had to put all his resources back into fighting inflation, which of course made the economy even weaker. So, if I'm going to say this in a practical sense, I would say this. What looks like is going to happen if he decides to give up on fighting inflation in order to keep the banking situation safe, you're going to most likely see things look a little bit better for a few more months. And then inflation is going to start to spike again. And then inflation is going to spike so high that he's going to have to put all of the weight behind the Fed to fight on that one problem. And then the economy is going to be forgotten. we have two situations right now. Do you want the economy to suffer a little bit and just, it's going to suffer. At this point, it's going to suffer, guys. We're going to have a recession. There's no way around it at this point. Are we going to suffer, have a recession, then get our way out of this? We're going to be fine at the end of it. Or are we going to try to like peel the Band-Aid off a little bit, get a little bit better, then all of a sudden we get a lot worse, and then we stay really bad for a while because, again, now we have to start off from a higher level of inflation. We can't start off at like, what they start off like 6 or 5% or whatever. If we're at like 5 or 6% right now, it's easier to go from 5% to 2% than let it get back up to 6, 7% than have to bring it all the way back down. Does that make sense? Because rates are already high. It's just, they've screwed this up so bad. Now, it's the Fed's fault. It's Jerome Powell's fault. It's the administration's fault. It's at this point, it's Joe Biden, Janet Yellen, Powell, Trump. I got maybe get a pass from some of you guys just because it was COVID. COVID was pretty much over when Biden became president. But, you can place your blame wherever you want to blame it, right? I would say all those people have some blame in all this from all the spending that was accumulated. But it's really come down to, ever since the 2008 financial crisis, we've been having free money. There's a reckoning that comes along with that. And then you also have to think about the fact that we're still deciding if we want to pay our debts at the beginning of summer. There's a cyclone of just like stupidity, arrogance, narcissism maybe a little bit in there as well, and personal benefit. Yeah. But I would say the best thing right now I think the Fed can do is raise by 25. We're going to have pain. Get the pain freaking over with. It's a lot easier to fix an economy when we have low inflation. Okay? It's a lot harder to fix an economy or make a healthier economy when we have high inflation. I think it just barrels down to that. 25 basis point rate hike, probably another 25 after that, and probably another 25 after that until we just get it freaking under control. And then we'll be fine afterwards. But there will be pain for people out there. Now, I make good money. It's not going to bother me. So, I can't talk too much about this because people that have jobs, they can lose their jobs by this happening. But at the same time, the people are going to suffer no matter what because of the choices made by the people in power over the last pretty much, frankly, 10 years. I saw it starting from like Obama trying to fix up with the TARP bills and stuff, going over to Trump, going over to Biden, and then, kind of like Obama did some bad stuff, Trump did some bad stuff. You can, whatever. They were both trying to fix that. Both trying to fix bad economies. I think Biden just tried to do a little too much spending there, and it seemed like it broke the camel's back here, especially because all the spending. Now there was too many jobs. Now there was the economy was getting too hot. Not what you need to have happen here, and we gave so much money out. I don't think people were using that money for day-to-day goods. I think they were using it for more luxury purchases, like I'm going to the mall, getting some new pants and shirts and stuff like that. I'm not saving this money in their savings account, using it for a rainy day fund. And, free money from the government. Not many people are sound financial decision makers. And, that's just the way the system has kind of worked us up, right? If you ask the government or the marketing companies, they want you to spend that money. That's why we had all those record earnings. You saw the stock market continue to go higher and higher and higher. There's a reason for that, right? Our marketing system here, as a former marketing director, it's pretty top notch. We know how to manipulate people quite a bit. Through like, how do I say this? Like through data and understanding like what people like, what people want. And despite that, I still suck at YouTube sometimes. But what do you call it? For like SEO and that type of stuff. Even TikTok now, they know exactly what you guys like. TikTok gets all the data from your phone. They know exactly where you are, what you're doing, what you're searching. They know everything about you. That's why you guys started to feel those deja vu moments as you guys were probably growing up or over the past few years. You're like, I saw a commercial about this, or I saw an ad on I searched up something like this, and all of a sudden, everywhere you see ads that kind of mimic that because they track you. Everything that you do is being tracked. Every search you do on TikTok, like cookie recipes. If I search for cookie recipes on TikTok, I will see an ad over the next few days talking about cookie recipes and how I might want to buy some products that might go into cookies. That's the world. And remember, I'm going to the cybersecurity or the security event in a few weeks now on the 26th. I'm staying at Circa, by the way. I found a couple days at Circa, a couple days at Golden Gate, and a couple days at the Aria. Moving around to have some fun. But I totally lost my train of thought as soon as. Oh, remember, they're coming with cameras that can track you, and they can see they can build an instant profile of you, track you throughout the place, and they'll put that on file. And the next time you come to that whether it's a restaurant or a mall, they'll track you in, and they'll build a complete profile, and they will sell that profile to other people. They will sell it, and they'll use it to see like, hey, a lot of these people like this type of stuff in the front. Here, we're going to help Macy's or Nordstrom's put this exact stuff out because they know that the people really like this type of stuff. We're gonna we're gonna be tracked, and our data is not going to be our own. I don't see any. I think Andrew Yang tried to make this like part of his platform when he was running for president. Our data is not our own. It's probably never going to be our own, to be frank. We'll probably have some type of regulation, but I mean, the technology, the industry is outpacing regulation at a rapid pace because if you think about it, you guys saw all the old men and women in Congress and the Senate talk about crypto. Do you know how they don't understand anything but they're trying to write laws on it? Just imagine trying to do something even more drastic when it comes to like, keeping your data safe and things like that. They have no idea what they're doing, guys. They have no idea. But, I'll be in Nicaragua. I don't have to worry about such things. But yeah, Ivan 25 would be my personal opinion would be the best thing for the long term, and medium term. For the short term, you want to see him pause. For short term, boom, pause. But I'm thinking more for like the overall economy, the health of everyday people. You want to rip the Band-Aid off. You want to get this pain over with. The market can reset. Just get it over with. If we drag this out, that's just pain for longer periods of time. And hey, Moontrader, what do I think about BBY? Let's see. Usually I don't trade this, of course. I mean, you could see the lack of volatility here throughout the day. It's not really getting much volume. It's probably going bankrupt. You could try to play with this a little bit of times. For me, personally, I don't even know. Do they still have options? Let's go over here. Go over to Livestream very fast. Look at the option flow data. I would think I'd be in a blood blister on my face. I was hanging out with Loki yesterday. He smacked his head back and whipped me in the nose, the lip pretty bad. It's not even showing me any flow for it. Reset everything. There's not even any flow for it right now. It looks from what I can see. Let me go to historical flow. Maybe there's been something over the past few days. A little bit here. Looks like most are puts at this point in the money. The call was in the money here for $1 strike. They bought this 4/28 expiration date, and they bought it on the 10th, so about 5 days ago. Let's see how this call is doing for them so far. They bought it at 42 cents, and it's currently at 31 cents. So they're down quite a bit. They're down like 25% on this call. They're probably just waiting for a larger move. That's just usually how you play this. So because the calls are so cheap right now, it looks like 42 cents. You could definitely have some fun here. This is one's for 4/21, 2023. They bought this yesterday. Spot bid 32 cents. What was this at $1 strike? And the price is at 103. Let's check out the chart here. They bought at 33 and it's at 25. They're losing some money too. So you're probably going to want to buy around a $1 strike, maybe a 125 strike. For this one, you could buy in the money and be perfectly happy with it. But you might be looking at something more late April, $1 to 125 strike price. Wait for the pop that comes out of some type of lucky break, and that's how you can make money with this. Otherwise, I'd be so hesitant about even trying to buy puts on this one because I'm just not sure how this thing is going to work out. I mean, these puts right here expire in 2024. These ones expire in March tomorrow, to me 2 days from now. How much money have they made on these ones? They bought at 43. With all the stuff that's been going on, it's up to 47 cents. Not really making a big profit there, if you ask me. This other one over here, 310. We're talking about that one. One for 2024. They bought at 64. It's at 65, but this expires in 2024, so we got a while to go there. But I'd go YOLO long on it if you wanted to play it, but nothing about this chart tells me that I want to buy. Right now, you want to let it sit for like a month, maybe even 2 months out, and just let that. It's just that the value of your option is going to go down. Then one day, if it pops up, there's your money. All right, then you take it and you run. You probably scale it over a period of 3 to 4 days. You could even think about this, like a few days up, a few days up, a few days up. But you're looking for something really mega like that, which is going to be hard. But if you get it, it's going to be a really strong move. But of course, don't put a lot of money into it because this is more of a play where the technicals don't support really doing anything of this time magnitude. you just want to have some fun, plop some options, this is the way to do it. There we go. We're bouncing off of the 20 right here a little bit. That's nice to see. Hopefully we can get back up here to maybe 25,257. Just at least test it out one more time before we break down. Because if we at least do that, maybe we have a breakout, a golden cross between the 50 and the 200 on the 4-hour chart. Yeah. And hey, Tony. Wow, finally a YouTuber with a whole bunch of sense. Thanks, Michael. What do you call? I mean, if you guys do this for a living like I do, you probably wouldn't be all too impressed. I think the big difference here is that there are people that trade for a living at home, and it's our jobs. And there are people who don't trade for a living. They try to trade. They're in the process, but a lot of the news comes from sources like CNBC, Fox Business, and stuff like that. Sometimes those organizations, Bloomberg, Yahoo News, whatever, sometimes they don't think too practically because they also need to drive ratings because they're a business. And that's why I explained to you a couple of days ago why even though the CPI data was at expectations around 6%, I was still like, this is not good news. And you saw the market react that way over the past few days as we kind of leveled back out here. I think we got so excited in the moment, and then we realized, oh, whoa, this isn't good news. I still have to adapt my own strategy to adjust to the market being stupid. Sometimes, like the hedge fund guys, everybody, it's not even stupidity. They have to justify to their owner that they deserve to be paid the ridiculous fees and money they do, so they have to keep on bringing in the money. And when they can force a trade like that, they end up making money. I mean, some people lose, of course, but some people win, and that's the way the market works, right? But just think practically about this stuff, guys. That's why I showed you guys the rent inflation, right? Definitely not coming down. I think the services inflation was actually a little bit better for us this time. Yeah, service inflation. All right. It didn't keep on going up. It's not good, of course. It's still kind of staying even, but at least it's not going up anymore. That's good news. Now, is it great news? No. Is it still kind of bad news in a way? Yes, it is. But we're slowing down a little bit. That's good. But yeah, well, it's not like the news this week was good, but the news portrayed it as such a good thing, and you saw the market go. And there is also a semblance of not trying to spread fear. I think over the past few days, the number one person who's been trying to not spread fear was Jim Cramer. When the bailouts were announced that all the creditors, all the depositors, they were all going to be safe and nobody was going to lose their money for making a bad investment, except for, the people that run the banks, sure, they're going to lose out on their options and stuff like that, but, whatever. The bailout there, I mean, we all know it's a bailout. Most people in America know it's a bailout, right? But if you said that in front of Jim Cramer on the TV, he was like, no, you can't do that. It's not a bailout. Did you want them not to save people? Did you want them not? And like people are saying, no, we understand why they did it, but it's a bailout, and a bailout is never a good thing because it shows that something is fundamentally wrong with the system at the moment. And so he's trying to like stop the truth from just being said in order to make sure people don't panic. And I don't agree with what he's doing, but I understand the premise of why he's trying to do it. I'm always the type of person that says, hey, the people that actually care about this stuff, they're usually pretty smart enough to figure out, hey, it's a bailout, but okay, fine, we'll deal with it. I'm not going to panic, right? And so I think you're seeing that effect happen with a lot of news organizations right now. They're just trying to calm everybody down, but maybe they're telling a little white lie here, a little white lie there. And then you have a guest that comes on and is like, oh, no, this was a bailout. And then they have, you learn over time to just, you find people that you really trust that come on CNBC. I don't really trust many of the anchors. I usually trust a certain amount of people that come on. Even when sometimes they're wrong, I still trust them and I still try to, say, hey, okay, I see what they were thinking here. I can kind of agree with it. And that's why I show you guys videos every now and again. And then by for Volker, yeah, exactly. Jesus, guys, this is a while ago, but yeah, I sucked at it for sure, saying his name. I'm bad at using my V's and my my R's, especially R's. A lot of times I try to say roof, and I say woof, because I might have issues with it. I've had issues since I was a kid. Fed has to pause. Hey, Mr. CS Rocker. I mean, I don't think they have to, but I mean, it's up in the air right now if they are. I think that, there's already banks out there calling for rate cuts. right? So we'll see how it all plays out. I think he has to raise by at least 25 basis points to keep inflation under control. But again, if his priority is the banking sector and the financial sector, which is a pretty big thing, he will not raise rates, and that will cause inflation to go up down the road, and we'll just have to live with the pain that comes later on. But we'll at least feel better for a little bit of time, right? And then if he values and if he has more preferential treatment towards fighting inflation, then fixing the banks after he's already backstopped the banks, he's already given them a quantitative easing, he's already helping them out a lot. Then he won't cut, but he won't rate hike. But to me, if he's done all that stuff for the banks, this, like you guys heard, extraordinary measures to protect the banks, they're all going to be fine now. There's no bank run, we're good. Why would he have to deviate from his rate hike strategy at this point? If all of a sudden now the banks have limited amounts of money they can get pull credit from, if they want to sell their bonds in the market, they can do so without being losing a whole bunch of money. So quantitative easing, he's putting more money into the economy. That's already inflationary in itself. How does he not combat that? I think that's the problem that we're going to be facing here over the next few months. Because now we're just kind of being this little shit show for a while. It'll be fun to talk about, but gosh, if you guys don't have a job, it's going to be sucky. And you hear the 10,000 layoffs coming from Meta. It's going to be interesting. Let's see. Hey Tony, BBY is KA puts. What do you call? I would go long on Bed Bath and Beyond, honestly, like a 125 call for like mid-June and just see where it goes and have some fun with it. But I mean, it would be a total YOLO play, but I think it would actually pay off some good money there. We'll have to keep and try. I'll buy one on Webull keeps on telling me, Michael, it's time to fund your Webull account. So I'll put like $100 in there and just have one call, and I'll just watch that one call on Webull to keep track of it. And then Bitcoin 12-hour thoughts. Not too good. We kind of made a lower low here. And at least we're still kind of staying around with some relative highs. Death Cross there was pretty nice. Golden Cross here didn't do anything. Death Cross there didn't do anything. So we've already broken down below some of these smaller trends right here. So that's not good. We're kind of going into more of a sideways trend. But I think all of you guys realize that now. We're just still having issues closing above the 25,211. At this point, if you want to use this, I would say you might have a pump back up to maybe 24,588, 24,600 or so. I wouldn't be using this all too much. Normally, the 12-hour can be a lot of good, but when it comes to moving average and stuff, it's not the best. You kind of have to adjust those a tad bit more. But it's bearish, but within the next 12 hours, you're probably going to have a little bit of a pump before we fully pull off and drop. And that kind of matches what we've been talking about here, trying to bounce off of the 20 moving average on the 4-hour chart before eventually curling back down. And that kind of times you up to when the market opens up tomorrow. We just have to hope that the market's actually strong tomorrow after kind of having this more mixed day here. Yeah, right, more mixed day, started low, but kind of finished off okay. We need to figure ourselves out here because you guys can see, again, Amazon was okay, Google was okay, Meta, technology, fine. You got oil plummeting off a cliff over here. My poor PXD is down like 7%. Healthcare, fine. Healthcare plans, medical devices, okay. Research down because they need a lot of credit to keep on doing their research, right? Banking, they deal with banks a lot. Financial services, insurance, right? All that type of really bad stuff. Different parts of the economy is fine. Different parts are bad. You got bookings.com down quite a bit. Lodging down here. People aren't going to be paying as much on credit. You're going to see rates go up even more. Wynn Resorts. You would think that they're going to give me a cheaper price. I looked at the prices to go to the Wynn. They're like $400 a night. So I'm staying at Circa Las Vegas or something like that. What's it called? I'm staying at Circus Las Vegas or Circa Las Vegas. Wait, how do I find the website here? I'm going to Circa Las Vegas for the first 2 nights. Then for the next 2 nights, I'm going over to Monday, Tuesday. No, for the next night, I'm going to Golden Gate Hotel so I can gamble with my friend because he only wants to gamble a small amount of money. So we're going to go to find a place that's like $1 blackjack or something, which is pretty fun. I like playing blackjack. And then it's better than playing the $20 minimums that I'm normally at too. You can lose money so freaking fast. And then at the end, I'll be staying the night at the Aria for the trip. And the Aria's on the trip. But I mean, I've never been to this hotel and I've been trying to go forever. I wanted to go to this hotel for most of the trip before I went to the Aria. But they were booked for Wednesday, I believe, so I couldn't get it. I couldn't fill out the whole thing. But it seems to be a cool place. I don't know. It's like it's not too expensive. It's like $150 a night. It's like 200 with the fees and stuff. But I never been here and I want to check it out, especially since I'm gonna be going all over the place. But yeah, so I'll let you guys know as far as what happens over the next few hours. I'll be updating you guys tomorrow as well. But keep it close on the market. I'm still of the effect that we'll probably want to come back down a little bit here. I'm hopeful that the market can try to rebound off of those nasty banking things here. So if the banks look to stabilize in Europe, and you guys will find that out over the next 5 hours, Bitcoin might actually just try to break out above 25,211 again. That's totally reasonable. If the banking sector is still kind of under some pressure, then you're going to come back down all the way down here to like 22,000 for Bitcoin. It's really, do people trust that Credit Suisse is going to be fine after this like $54 billion bailout, $53.8 billion bailout coming from this, the Swiss government to the bank? I would say probably not, but because we got that good PPI data yesterday or today, maybe there's a little bit more hope. I know. I would just say day trade to your heart's content at this point. Short term, fine. More towards the end of the day, I'm much more worried about Bitcoin. So not now, but like towards the end of today's day candle, I would say, okay? Much more precarious moves for us going forward, okay? But I'll see you guys a little bit later. Thank you guys so much for watching the channel. And as far as futures are concerned, let me check it out for you very fast. Up, 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 just a little bit here. Trying to make a little bit of a bounce. Again, we'll have to see, but I think this Credit Suisse news is going to be looking a little bit better for us. I'm more concerned, not that we're going to have some type of really bad opening, but we're going to have a decent opening and we just start falling off of a cliff somewhere through the middle of the day. That's what usually happens in these scenarios. We kind of start off okay, everybody's like, oh, everything's fine, then all of a sudden there's a panic that happens, and then we're down like 400 points by the end of the day, if that makes sense. But we'll see, guys. See you guys a little bit later. Hopefully this Credit Suisse nonsense can be overcome. Otherwise, Bitcoin's going to $23,000. And the technicals at this point, you just want to see us hold. You want to see us hold the 20 right here, and if not, at worst, you just want to see us hold right down here on 23,741. Really, if we break down below that, that's where the big move starts. We can easily break down below this, have a little bit of a weird trading sideways move, and then rip towards the morning, okay? But I'll see you guys a little bit later, and let me know if you have any questions in the comments below. Thanks.